Hello and welcome back to Trading with CJ. Now, last month I made a video covering companies that were going ex-dividend in June, and it got some pretty good feedback. So I thought I'd continue on with this and maybe make it into a monthly series. So today I'm covering 8 companies that are going ex-dividend in July. Now, 4 of those are going to be from the Ftse100, the UK market, and 4 from the S&P500, the US market. And obviously there are a lot more companies going ex-dividend in July. So if you want me to cover some more in future videos, then let me know in the comments below. Also, drop a like and subscribe to my channel. It really is appreciated. Now, before we get into it, I just want to say that I'm not a financial advisor and this video is made purely for entertainment purposes. So if you are planning on investing into the stock market, you should always do your own research first. So let's get into it.
So the first stock up is a very popular dividend payer, and that is JP Morgan Chase, ticker symbol JPM. Now, unfortunately, this one is going ex-dividend very soon, so I haven't got much time. That is the 2nd of July, and it'll be paying out in the same month on the 31st of July. It pays a nice dividend of 3.89%, which is roughly 90 cents per share. So it's pretty solid dividend payer as well, this company. If we look at its graph over the last year, just like most companies, it has been hit around February time, and it's at a very low price at the moment. If we look at its maximum graph, it has been growing over the years. This is all the way here from 2013. Pretty solid growth there from this company. Analysts actually have this company as overvalued by about 15%, but if we look at it at the PE ratio, the PE ratio is pretty good actually, 8.59. So that's a nice PE ratio there. It's been predicted future growth in the next 1 to 3 years of 25%, which is very nice, and future return on equity of 11.4%. It's got very high income there of $36 billion. This is a very solid dividend paying company. It's been increasing year after year, and it's got a very low payout ratio actually of 39%, which is great. Another point on this company, insiders love it. They have been buying shares in the last year, in the last 6 months, and in the last 0 to 3 months. So this is JP Morgan Chase. Like I say, not much time to get involved in this one if you are looking for that next dividend payout, but it pays a nice dividend of 90 cents per share, 3.89%. The next company up on this list is National Grid. So National Grid, EPIC code NG, is in the Ftse100, and it's an energy company that provides electricity and gas. Its current share price is £9.66 per share. As you can see by the graph, it was growing throughout the year, then the crash, and now it's started to recover again. Unfortunately, very like JP Morgan, this is going ex-dividend very soon on the 2nd of July, and it will be paying out on the 19th of August. It does have a very high dividend yield actually of 5.03%, which is going to work out around about 32p per share. Now, analysts have this company as 4% overvalued, and if we look at their PE ratio here, the PE ratio is 20.63, which is actually really high compared to the industry and the market. It does have a nice predicted future growth in the next 1 to 3 years of 13% and 11% on return on equity. It's a pretty stable dividend payer though, and it has been increasing over the past 10 years, but although it does have a very high payout ratio of 132%. So that's National Grid. It's quite a popular dividend payer in the UK. The next company up on this list is MasterCard. So MasterCard, ticker symbol MA, is a very popular stock. Most people know this company. They are a payment processing company basically. A huge share price at the moment of $289 per share. MasterCard is going ex-dividend on the 8th of July, and it will be paying out on the 7th of August. Now, it's not the highest paying dividend company, but I wanted to include it because it's a very popular one. But it will be paying out a dividend yield of 0.55%, which is around about 40 cents per share. So it's by far not the highest, but it's a very popular one that a lot of people do hold. If we look at the chart here, this is very impressive. Look at this growth. It has been growing year on year, and it's not ridiculously off of its highs, to be honest. And I can see it probably getting that in the future. So it's got huge growth, this company. Analysts do have this as overvalued by 48%, and it has a pretty high PE ratio here actually of 36.55. But you'll tend to find growth companies tend to have a fairly high PE ratio, although it is predicted to have a future growth of 20.6% in the next 1 to 3 years, and a huge return on equity of 86.9%, which is something I love about this company. That is a massive return on equity. It's got a pretty good profit margin, which has been growing year on year for the last 3 years anyway, of 48%. And a debt to asset ratio there of 79.84%. So that's not too bad either for a company like this. The main thing about MasterCard is it's a growth company there, and it's grown 16% in the last 5 years. And the dividend payout is pretty stable as well. It's only payout ratio of 19%, so that's pretty low. But like I say, the dividend is only 0.55%. Next up on the list is British American Tobacco. So British Tobacco is EPIC code BATS. It's in the Ftse100. This company is going ex-dividend on the 9th of July, and it will be paying out on 19th of August. It's a higher dividend paying company, this one actually, 6.65% dividend yield, which is around about 52.5p per share. So it's pretty high dividend. This company actually has dropped off massively, as you can see here, but it was growing from 2017 onwards when it hit highs of around about £55 per share, and now it's down to just £31. So it's at a current massive drop off there for this company. It is undervalued according to analysts by 61%, so that's pretty low valuation there. PE ratio is also 9.84, which is a pretty fairly decent PE ratio for this sort of company, and it's predicted to have 10% future growth in the next 1 to 3 years. If we look at its debt to equity here, 22% profit margin, that's pretty good to be fair. At least it's making profit still. And the debt to assets is actually 54%. So I think that's not too bad either. Debt to equity is 69%, which is a little bit high. Its dividend, as I say, is quite high, actually 6.65%. And the payout ratio for that is 81%, which is quite a high payout ratio. So that is BATS, British Tobacco. Next up on the list is Abbvie. So Abbvie is ticker symbol ABBV, and it's a massive US stock, and it's basically a big pharmaceutical company in the US. It's currently trading at $96 per share, and it's going ex-dividend on the 14th of July, and it'll be paying out on the 14th of August. Paying out quite a nice dividend actually of about $1.18 per share, with a dividend yield of 4.91%. So that's quite a nice dividend there, and it's actually got a 79% payout ratio, so that is fairly high, but it is covered by its earnings. Now we look at Abbvie's graph over the course here from 2014. It has been growing. Then there was a slight drop off in 2018, but it's starting to get back to where it was, almost. So this company is actually undervalued by 24% according to analysts, which is very nice. And the PE ratio is 16.70, which is pretty okay. It's slightly less than the industry's of 18, which is good. So the profit margin for this company is 23%, which has also been growing from the last few years. But the debt has also been growing, 109% debt. So fairly high debt there on this company. But the return on equity is predicted to be, in the next 1 to 3 years, 86.4%, which is great. So that is Abbvie with a very high dividend there of 4.91%. Next up on my list is the 6th company, and that is EOG Resources. So EOG Resources, ticker symbol EOG, it's in the S&P500, and it's a big energy company, oil and gas. And just like most energy companies, it's been affected massively from around February, March time. This company is actually going ex-dividend on the 16th of July, and it will be paying out again in the same month, 31st of July. It's got a nice dividend yield of 3.08%, which is going to work out around about 38 cents per share. If we look at its maximum chart here, just like most oil companies, it's a little bit up and down, but at the moment they are almost at their lows, to be honest, from what they've been in a long time. This company is 52% undervalued according to analysts. Its PE ratio here is 11.18, which is fairly good, but it is a little bit high compared to the industry of just 7.9. Future growth is predicted to be around about 50% in the next 1 to 3 years. If you look here, the profit margin is 15%, but the debt to assets is 41%, which is not that high really at all. And it's got a very low debt to equity of 24%. So the balance sheet is looking fairly good for this company. The dividend has also been growing for the past 10 years, and the payout ratio is only 34%. The company has also had earnings growth of 50% in the past 5 years. So it's the energy sector, dividend there of about 3.08%, paying you 0.38 cents per share. Next up on my list is a company called Pennon Group. So Pennon Group, EPIC code PNN, is in the Ftse100, and it's basically an environmental infrastructure company, kind of like water and waste management. And this company has been growing. You can see its share price in just this year alone. It's just gone up massively. It's almost at its highs actually. Its highs was 11.75 and we're at currently 11.18. So it's very close to being its highs. It's going ex-dividend on the 23rd of July and it'll be paying out on the 2nd of September. And it's going to pay you a dividend yield of 3.90%, which is going to work out around about 30p per share. Like I said, this company has been growing and it is actually still undervalued by analysts of 63%, which is very good. It's got a PE there of 7.05, which I don't think is too bad actually. And return on equity is predicted to be 16% in the next 1 to 3 years. If we look here at its profit margin, 14% profit margin, kind of in line with where it has been in the past. Debt to assets though is quite high there, 74.68%. And it's actually got a debt to equity of 135%, which is very high. Although this is the dividend company here again, and it's been paying out for the past 10 years, and it has been growing as well over those 10 years. But the payout ratio is very high at the moment of 158%. So probably not sustainable in the long term at those rates, but it is paying at the moment this dividend of 3.90%. The next company and the last company up on this list is SSE. So last company up here is SSE, EPIC code SSE. It's in the Ftse100 and it is another energy company and it specializes in the supply of electricity. It's going ex-dividend on the 23rd of July and it'll be paying out on the 18th of September. It's got a very high dividend, which is why I want to include it, of 5.87%, and it's going to be paying you about 56p per share. This company is actually undervalued slightly by about 9%, according to analysts, and the PE ratio is 21.07. So that's pretty high compared to the industries of about 10.7. It is predicted a future growth of 15.4% and a future return on equity of 16.5% in the next 1 to 3 years. If we look at its balance sheet here, it's currently making a negative profit margin there of 0.87%, and the debt is fairly high as well of 76.61%. And the debt to equity as well is 197.5%. So it's got a lot of debt in this company, but if it can pull that back, it is an energy company, so energy companies are kind of struggling at the moment. Although it does have a dividend, and this dividend is paying out, and it has been increasing over the past 10 years. The payout ratio, though, is very high of 197%, but I've included this one because I know quite a few people that do hold this stock, SSE, and the dividend is confirmed for the next payout.
So that's just 8 companies there that are going ex-dividend very soon, within the next month. Let me know in the comments below if you already own some of these, or maybe you're planning on investing into some. And if you found this video useful or interesting, or maybe want me to carry on with this monthly series, please hit the like and subscribe to my channel. It really is appreciated. And once again, thanks for watching, and until next time,